Good day everyone, welcome to Cilinix FX Capital, and in this short educational video for investing we will go over what is an ETF and everything you need to know about exchange traded funds. First of all, what are we going to discuss? We are first of all going to go over the broad definitions. So what is an ETF? Then I will go over a few reasons why you would buy an ETF. We will go over the different types of ETFs there are. Also, more specifically, we will go on about passive versus active managed ETFs. And lastly, but definitely not least, we will go over how ETFs are valued. So, first of all, what is an ETF? An ETF is an exchange-traded fund, which differs from more traditional mutual funds in the way that ETFs can be traded on exchanges throughout the whole day, while mutual funds can only be traded at the close of the market. An exchange-traded fund is a type of security, or better way to say it possibly is a basket that holds a lot of other securities. So these can be stocks, commodities, currencies, bonds, etc. An ETF tracks a certain index, sector, commodity, or an asset, and that is also where another name for an ETF comes from, a tracker, because it tracks things. And to give you an example, SPY, or the SPDR S&P 500 ETF, that's the full name for it, tracks the S&P 500 index and thus buys and holds all equities in this index and tracks its performance. So why would you buy an ETF? And first of all, I want to disclaim that this is no financial advice. I'm not here to give you financial advice. I'm only here to educate you about investing enough so you can create your own advice for yourself. So why buy an ETF? Because why not just buy all stocks in the S&P 500 instead of the ETF I just mentioned at the first part? Well, ETFs offer lower costs in the form of less commissions. When you would like to purchase all stocks in the S&P 500 index, first of all you would be very busy for quite a while, but you would also at most brokers or most exchanges you would pay commissions per stock you buy, and when you buy an ETF you only pay the commission fee for this ETF, and you do pay an expense ratio, which is the TER, and that is a ratio, a percentage per year of the capital, of the total capital you pay, but it's quite low. So this can get as low as 0.03% of the capital you have. For paying an ETF that does everything for you and that you only have to pay commission for once. To give you a more thorough insight to what ETFs or what types of ETFs there are, I will give you some more examples than SPY. So there are bond ETFs, which track certain bonds and usually more than one type of bonds. If you don't know what type of bonds there are, you can look it up. Maybe I will make another video about it, but usually more than one type of bond. Otherwise you could have just bought the bond. There are also industry or sector ETFs, which are comprised of stocks and assets in a certain sector, like technology or healthcare. And then, like the example, you also have index ETFs, which track indexes such as the S&P 500, but it could also be the Nasdaq, which is technology-based, or the Dow Jones. Apart from that, you also have commodity ETFs, which primarily hold commodities such as crude oil, gold, silver, platinum, you name it. And lastly, you have currency ETFs, which hold different kinds of currencies, such as the dollar, the euro, but maybe they also hold some more exotic pairs, or the yen. And so these are very specific ETFs types. But of course there are also mixes of these different types, so there's an ETF for everybody. An example is that most ETFs that track an index also have a tiny bit of commodities, direct or indirect, and they usually also hold some currency. So then we'll go over the two types of management, because there are actively managed ETFs and passively managed ETFs. Let's begin with the passive one. So the passive one is where the ETF simply tracks something, and the owner or the issuer of the ETFs are not actively buying or selling the assets in the ETF. Like the S&P 500, they just track the S&P 500, buy the stocks that are in it, but nothing more. But there are also actively managed ETFs, which, like the name suggests, are actively managed and changed by its owners or issuers by selling and buying different equities or assets for the ETFs. And usually these ETFs, the actively managed ETFs, charge a higher expense ratio. So then on to possibly the most difficult part, and that is how the value or the price of an ETF is determined. So the price of an ETF is based on the NAV, or the net asset value, of the underlying holdings. So basically the cash they hold, the bonds they own, or the stocks and other kind of assets they hold in their basket. This total amount is then divided by the amount of stocks there are in the ETF, and that is the price you pay for the ETF. So because the underlying stocks or commodities they change per day of an ETF, this is weighed once every day for most ETFs, and still the ETF moves throughout the day. So how does that happen? Well, the NAV is calculated once every day. That differs in time zones, but also in which country the issuer of the ETF is based. So how does this happen that it changes over day? And that is because of supply and demand. So the NAV is calculated once every day, but then demand and supply play their roles on the price, meaning that when demand increases, the price goes up, and vice versa. When it decreases, the price goes down. And that is how the price you pay for an ETF is produced. So with this all being said, I hope to have taught you enough about ETFs to know what you are buying when you buy an ETF, and what kinds of ETFs there are, and about the pricing model. And I again want to disclaim that this is not financial advice or advice to buy ETFs. You should always do your own research. So thank you for listening, and make sure to check out the other videos for more financial advice or Forex education.